Hi everyone. Today let's take a look at the chaos beneath the calm on the S&P 500. Then we'll take a look at all the normal indicators and data. Then we'll get into the charts, as well as my results for the week and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So let's take a look at the S&P 500 hitting that 5,000 mark and why there might be a little bit of chaos underneath the market's calm. They mentioned that the first month of the year was very, very strong, and we continue to see strength as we go forward here in February. They also mentioned that earnings were also quite strong, 6.8% growth above the 5.7% average, which suggests 9% earnings growth for Q4. And then you can see the charts here from 5 to 9 February. We dipped a little bit earlier in the week, and then we ended up much higher later in the week. All of the major indices were positive, with the Dow being mostly flat during this period, but all the others were up quite a bit. They also mentioned the fact that the S&Ps were up 3.6% after reporting earnings, which was higher than the 2.7% median during the last 10 years. So we're definitely a little bit extended there. We're higher than average. We've seen growth, and you could potentially argue that earnings are driving that growth, but definitely historically strong growth. And then looking at the forward earnings ratio, 20.4, which is higher than the 16 times 12-month forward earnings that the S&P typically trades at on average. So we're a little bit extended to the upside. You could argue that maybe stocks can grow into this over the next 24 months on the back of AI, but obviously that remains to be seen. Right now, historically, we're a little bit expensive. Just keep that in the back of your mind. They also mentioned there's still a little bit of exuberance and stocks putting in really strong earnings. They mentioned Palantir here jumping 31%. We also saw Meta and Amazon jumping really strong here on earnings. And then their last point here is the average for the VIX. 17.7 is the 20-year average. And you can see we're sitting down at that 20.8 level, so very, very low on the VIX, not indicating a lot of risk or volatility. And you can definitely argue that it is historically low. And based on that, they're arguing the next move in the S&Ps could be a 10% move to the downside. Moving over to the Fear and Greed Index, I did talk it on the Friday session, but we can hit it real quick here. Finished at 78 on the week, up a little bit. 1 week ago, we were at 70 yesterday. Thursday, we were at 76. You can see we've been trending up. A couple of shallow dips. I kind of expected a little bit more follow through here. We just have not seen it yet. And you can see on this previous top, we did have a couple of dips and then a slight rally before we ended up getting that bigger breakdown. Obviously not quite the same structure. It does look quite different with a peak, a bit of a trough, and then a rally up here. But right now we're going higher. We're definitely in extreme greed, and you can see that here on momentum. Stock price strength is ticking up here a little bit over the last week, still in greed. Breadth continues to taper in neutral, and then put call ratio, extreme greed, volatility, neutral. That's what we were talking about with the VIX. With the VIX sitting in that 13 range, and then safe haven demand and junk bond demand have moved into extreme greed. You can see safe haven demand heading higher, meaning that investors are not really looking at risk. They don't see any risk, so they're pushing more money into stocks, and bonds are underperforming a little bit. You can see that here with junk bond demand. The spread between junk bonds and those investment grade bonds continues to trend down towards that lower level. So no fear in markets, lots of greed. And as a contrarian metric, this is a little bit concerning. Moving over to the AAII survey, you can see we're right in that 49 range for the bulls the last 2 weeks in a row. Really very little change from the previous week's survey. So still tons and tons of bulls in the market. You can see the bears are pretty much being weeded out. Again, this is a little bit concerning. It's tough to be a contrarian when markets go up every single day, but this is definitely concerning. You can see that historical average for bears, 31%. We're all the way down at 22%. Lots of exuberance. We're not quite at those 1-year highs for bullishness. We did hit that in December. So we've come down a little bit from there, but still tons and tons of bulls, well above those historical averages. Moving over to seasonality, you can see going into the Monday session, it's supposed to be a pretty strong jump. I think this might have pulled forward into that 9th session. So we might have already seen this rally up, and then we're supposed to get sideways chop here for the NASDAQ, basically through the rest of the month. Similarly on the Russell, sideways chop, finishing flat from current levels. And then the S&Ps and the Dow are actually supposed to taper into the end of the month, so flat from here all the way up until that last week. And then we'll keep an eye on it going forward. And then looking at the calendar, you can see it is bullish all week here until that options expiration. And then once options expiration comes through, then it is bearish basically for the rest of the month. The week after options, very bearish. And then nothing here until we get to the 29th, the end of the month. So keep that in mind. Bullish up until this week, and then next week could be quite bearish. Moving over to earnings, there are still some earnings going on. You got Waste Management here, Federal Realty on Monday. Tuesday, you got Coke, Airbnb, fairly interesting, Marriott in there as well. MGM, always fun to watch. Looking at Wednesday, you got Cisco, CME Group. I trade a lot of options, so it's kind of fun to watch that as well. Then you got Occidental, some petroleum company in there. And then moving over to Thursday, you got Deere, DoorDash, always fun to watch. And then for the Friday session, basically nothing here. So still a couple of companies out there for earnings, but all the heavy hitters are already done. And then moving over to the economic calendar, looking at Monday, there is nothing. But getting into Tuesday, you have CPI, core and headline at 8:30. Obviously, that's going to be interesting. Core year-over-year expectation is a step down to 3.8. Month over month flat, and then the headline number flat for month over month, and then the year over year is supposed to step down to 2.9 from 3.3. That is a massive step down in the forecast. That's pretty interesting. I think if we see that much of a step down, that's going to be quite bullish. Definitely something to keep an eye on for Tuesday. And then looking at Wednesday, nothing impactful here. GDP for the Eurozone. And then looking at Thursday, you have core retail sales, initial jobless claims, as always. Philly Fed manufacturing, fairly interesting at 8:30, but the big one obviously being those retail sales for the Thursday session. And then looking at Friday, you have PPI, all the Michigan numbers, and PPI month over month is actually expected to step up a little bit from the previous read, which is interesting for the core number. And then the headline number is supposed to step up from minus 0.1 all the way up to positive 0.1. So PPI heading a little bit higher in terms of expectations. Obviously the CPI is a little bit more impactful, but interesting to see that on PPI. Moving over to Max Pain, this is the third week options expiration. You can see there are already 3.2 million options in the market, put call ratio at 2. But the thing I want to highlight here is look how far down this Max Pain is at 478, super low. Current price up around 500. And let's zoom out here just for a moment so you can see there are still a ton of puts in the market. They are well out of the money, so there's definitely some bullishness in markets, people selling puts, propping up markets, and there are a lot more puts than calls like I mentioned. But in terms of current price action, you can see 490 at 76, 495 at 90. Those would be your call walls. So if we get a finish below them, that would be a pretty significant step down for the options expiration. If we finish at the top of the puts right now, that would be 501, and that's basically where we already are here at 594 cents. So this looks quite bearish to me. And then remember, the seasonality says that the week after this is supposed to be quite bearish as well. So just keep that in mind going into this week and potentially next week. Moving over to the charts, starting off with the S&Ps, another bullish week, up 1.39%, momentum bullish. RSI still super overbought, but still bullish. You can see we're just above that trend line here, right at this trend, marking the middle of this up move. And we'll see that a little bit closer on the daily chart, but right now you can see we are overthrowing that longer term trend line, the one that marked the top here in July. So that is quite bullish as a potential breakout, or we could immediately reject from current levels, which would be more in line with what we saw on the Max Pain chart. But jumping down here to that daily chart, you can see what I mean. We are right at that midline trend, hit it right here, still got above the longer term trend, which is interesting. But that midline right here at that 501.27, we had that as a price target. Sure enough, we hit it. Momentum bullish, RSI bullish. But the question is, will we reject from here? Remains to be seen. If it breaks, you have another trend line up around 516.50. Obviously, I don't think we're going to get into that area. That would be super aggressive over the next week, especially with that third week options expiration. So just keep that in mind. Critical resistance, everything is still bullish. I don't really have any levels here, obviously, because this is still price discovery. Let's go ahead and add one at that 500 level. just to give us something to work off of at that 500 point. So 495.73 if 500 breaks, and then if this breaks, there's nothing to the upside. And then moving over to the SPY here on the Tasty charts, this is the monthly view. I just wanted to highlight the fact that we're getting pretty close to that third upper ATR band on the monthly chart. That is that 517 level, which actually does correlate with that upper trend line that I mentioned, which is pretty interesting. 517 would be your upper limit. You can see on these upswings, you can ride that upper ATR band for a while, but right now it's flat, so that's quite bearish. If you hit it, that would act as resistance. I do want to highlight here, let's look at the weekly chart for a moment. You can see we are well above that third ATR band on the weekly chart. Pretty uncommon to see that on the S&Ps. This data is going back 20 years, and you can see we did it here in January of 2018, and then we did overthrow it just briefly here in February of 2020. Very, very uncommon to see swings like this where you get above that third ATR band on the SPY. So just keep that in mind. Like I mentioned, still got a little bit of room to the monthly band, but everything below that we are well above. Moving over to the NASDAQ here, you can see another strong week, 1.8. Got above this longer term trend line there, sitting at 17,700. Got all the way up to 17,962. Next resistance for trend would be 18,100. Momentum bullish, RSI bullish. And then jumping down to the daily chart, you can see obviously the daily structure still very bullish. Upper trend line resistance would be that 440 level. At this point, that's where you expect to get to based on this structure. Rallied up, tested the trend, rallied up again, looking for that resistance at 440. Marked the previous tops here in December as well as January, and that's where we're headed here in February as well. And then similarly, jumping over to the Tasty charts for the NASDAQ, we are right at that third ATR band here on the monthly chart. We overthrew it just by a little bit on the NASDAQ. So that is, again, not super bullish to me. That is an important area of resistance. You could see this start to turn up, and then you can kind of grind along it, similar to what we did here from 2020 into 2021. But eventually you do break back down into the middle of the range, which is currently trading around that 360 area. So keep that in mind. Let's look at it on the weekly chart. You can see, just like the SPY, we have overthrown that weekly chart by quite a lot. The NASDAQ is more volatile, so overthrows of that third ATR band do happen a little bit more often. You can see we did it here into June and July, still eventually pulled back and then rallied up to it again. And then similarly here, we did overthrow it in August of 20, overthrew it here on the pre-COVID highs. So you do see it a little bit more often on this chart. We did it back here in January, that is 2018. So you see it occasionally, but it is worth noting when you are above it, eventually you do see a pretty substantial breakdown, and you've kind of topped out, at least in the short term, for that move. And then moving over to the Russell, this was the surprise of the week for me. Momentum was trending down, and then we hit that VWAP, found some support, and then rallied up super aggressive, ended up finishing 2.5% to the upside. Momentum bullish, RSI looking much, much more bullish at the end of this week, and you can see we finished at the top of the candle as well. We finished above my 198.75 level, so to the upside you got 102.88. 204.62 above that. And you can see that wick here from the end of December got all the way up to 205.49. So that'll be interesting to see if we get a higher high. But this looks very bullish, the way that it engulfed all these previous candles, going all the way back to the first week of January, closed at the high, and then you would expect it to go a little bit higher. Let's go ahead and extend out this trend line. That would give you a little bit of resistance here in that 201.50 area as well. But right now, the Russell looks much, much more bullish after 4 weeks of consolidation. And then for a moment, let's look at it on the daily chart. You can see that Friday session, very, very strong. The Thursday was strong as well. It was still kind of choppy from Thursday the 1st all the way up until Wednesday the 7th. Sideways choppy price action, but then we got that push on Thursday, said it looked very strong, got above the trend line, and then we got a really strong follow through on Friday. So 201.88 is your price target right now. And then moving over to the Dow, you can see the Dow has been on a colossal run. It's been straight up from 30 October until current price. We had one very small down week on the 2 January week, down only 0.5%, and then every single other week in that move has been bullish. This last week was only positive 0.08%, so not super convincing there. This 387.77 level seems to be some resistance. That was the high of 2 weeks ago and then the high of last week, so Something to keep in mind, it has tapered a little bit in terms of strength, momentum fading a little bit, definitely very overbought. Let's look at it on the daily chart. You can see what I was talking about. Gapped up 3 candles in a row, starting to break down a little bit. Momentum basically zero, RSI breaking down. And then you got volume stepping up on that down candle. Also not a great indicator if you're looking for another bullish move. Don't forget, everything in terms of structure is still bullish above all the EMAs and SMAs. So do keep that in mind, but there are a few bearish indicators starting to show a little bit of resistance and potential for a break. After the 3rd week options expiration, I would expect sideways choppy price action into that expiration, and then the week after next is when you would expect those bigger down moves, especially according to that seasonality chart we looked at earlier. Moving over to the ratios here, we got the Russell, SPY Russell, and NASDAQ SPY. We finally saw the Russell start to take over a little bit. The Russell had been underperforming for several weeks versus the SPY, and then we saw this week where this ratio pulled back pretty significantly. The momentum is still bullish, which is interesting, but we clearly rejected from that 252 level, which is actually the same exact level that we were at last time. We overthrew it to the 259 level last time, but eventually we broke back down to the 231 level. You can see that marked here, and it does seem like we're going to head back to that 242 level, so a little bit of Russell outperformance versus the SPY, and we've seen moves like this. It's worth noting we did have a pullback here, got one more rally, and then it eventually pulled back, so could take a little bit longer than it looks, but right now I would expect Russell outperformance, and that fits with seasonality as well. And then you got the NASDAQ also bouncing off of that 355 level, and the NASDAQ was a very good performer this week, and it seems like it's headed higher versus the SPY, so SPY at the worst, and probably the Russell here at the best. Moving over to the SPX divided by the M2 money supply, I've added some structure to this chart. You can see this kind of trend. We've overthrew this trend line a few times, but I think this gives us a little bit better perspective on where we are historically. It's been a massive run, overthrew it, pulled back to the lower bound here, established that lower trend from the lows in 2009 through those COVID lows, and then we marked it again here in October of 22. Same exact trend line, probably would have helped on that trading, touch that level. And now we're headed back to the upper level of this trend, which is currently sitting at 24.25, and we're just a couple of tenths off of that level. I do have a level here at 24.49, and you can see going back all the way to the .com level. This is the monthly chart, by the way. That is a critical neckline before that bigger breakdown. Again, anytime we get into these ranges above that 2050 level, we eventually pull back. So to me, this is still a bubble, but absolutely this can go higher. And looking at that resistance, like I mentioned, around that 24.25 level, and then looking at this on the daily chart just for that shorter term perspective, you can see this most recent run rallied through this level, broke this most recent trend, and then the next one is that level with a little bit to go to that 24.50 level as a potential overthrow, and then I would expect this rally to be done if we even get into those ranges. Moving over to Apple and Tesla. Apple really has not done much. On the week it was positive 1.61%, but this is the same exact level that we were at in June of 23, so we've been flat for quite a while. Obviously it's had some swings in there, but right now it's basically in this trading range. Doesn't mean that it can't bounce potentially up into that 97, 98 area right at these most recent peaks, test that level again, and you can argue it does look a little bit bullish. Came down, tested that 21, overthrew it a little bit, rallied up, tested it again, found some support, got above this downtrend line, and you can see we tested it again this week. It does kind of look a little bit bullish, potentially looking for a slightly higher high. You definitely got a higher low. Buyers came in at that level, so still range bound, showing some signs of bullishness. And then looking at Tesla, Tesla actually bounced pretty strongly this week. Just 1 week removed from their massive down move on earnings. You can see that 13.6% down move. And then momentum has faded here. We stepped towards bullish. RSI perked up a little bit, dipped to a little bit lower level, 177.70, found some support, and now we're rallying back up to that 197.75 level. If that breaks, there's a lot of room to 214, and it could be at least a move like this where you get a big down move, find some support, get a counter trend rally, and then get another breakdown to a lower low. So this is still a downtrend, but these counter trend rallies can be aggressive, and it does seem like 214 could be your price target on that move. Moving over to Amazon and Meta, 1 week removed from their massive earnings, and it seems like Amazon continues to find legs here. Makes sense. Amazon is not at all-time highs while Meta is. Hit that next price target on Amazon Next one for me, 181.41, trend sitting between it here at 177.30. If that breaks, then there's a lot of room to the upside. Like I said before, this is not all-time highs for Amazon, but it is getting close. We're right at the kind of neckline before these peaks, and then it looks like and it does seem like we're headed in that direction. So bullishness across the board, obviously super overbought on the weekly chart, but doesn't mean that it can't go higher. Amazon looks good. And then Meta found a little bit of weakness. Ended up down on the week 1.45, threw a wick to the downside, which did get bought up at that trend line. So that trend is still holding at 465.83. But if that breaks, then you would expect at least some down move to retrace some of that move from earnings. Momentum is still bullish here, but RSI is pulling back a little bit. The SMA is down at 71.88 on RSI, so might see a little bit more pullback on Meta. It'll be interesting to see how these continue to play out after their last massive moves. And then moving over to the AI plays, Microsoft and NVIDIA, both of these had massive weeks. Microsoft 2.27%, very, very strong, continues to hold that lower trend line, pushing towards the upper one at 423.55. The structure has obviously been very bullish. We've been in it for a while, continues to look very good. If we get to the upper trend line of this range, that would put us to 446, 447 in that range. You can see we've overthrown this top trend line before pulling back several times, and it doesn't seem unrealistic that we could get to the top of this range again. And then you got NVIDIA just continues to be on this straight colossal run, 9.03%, momentum bullish, RSI super overbought, but super bullish. This can absolutely go higher. Let's see where we were at before we pulled back last time on RSI. Pretty much right in the same range, 85, 87, currently sitting at 83.50, so potentially a little bit more upside room. Let's go full screen on this just to try to give us a little bit of perspective. And you can see even with this type of structure that I tried to add in here, it's really tough. It's been a colossal run. There's not really any decent levels to work off of. Obviously all-time highs here for NVIDIA. I do have some resistance templated up around 820, which I would have said seems ridiculous, but I would have also said that this 650 and then 720 area seemed ridiculous as well. And sure enough, here we are, another very strong week. So resistance up around 820. Who knows? Seems like it could happen. Momentum is bullish, RSI super bullish, but again, a little bit overbought relative to NVIDIA. For any other stock, this would be massively overbought, but NVIDIA is very, very powerful. It's been very strong, and it can absolutely get into a little bit higher range up to that 87.50 level on RSI. So makes sense. NVIDIA could go higher. And these AI stocks are definitely the ones that are driving basically the markets as well as the NASDAQ higher. Moving over to staples and discretionaries, we got a pretty big down move on staples. In terms of structure, we're still in it here. We're still above all the EMAs and SMAs on the weekly chart, but 1.45%, pretty strong down move. Really needs to hold that 144 EMA at 72.99. As long as that holds, this could absolutely go higher. Resistance would be that 74.40 level in terms of trend. And then looking at discretionaries, very, very strong move here. So rallied up, showed weakness, broke out from that 2 weeks ago. Continuation here after testing some levels, broke out from the short-term resistance. Now we're hitting that 180.10. If that level breaks, I would expect this to push up to 185.36 and probably ultimately up to that 189.39 level. And you can see how those are important historical levels. First one here right at that neckline before that really strong break. And then you can see those wick rejections here in March of 22. So it does seem like we could get to that level over the next couple of weeks. And to me, discretionaries looks quite a bit more bullish in a more risk-on environment here, with staples pulling back and discretionaries rallying. Moving over to transports and industrials. In terms of sectors, these look like some of the strongest, obviously besides tech and semiconductors. They've been leading markets higher, really the strongest, but transports and industrials have come through pretty strongly over the last few weeks. They were strong, obviously, when everything else was strong, but look at transports breaking out here well above these previous highs, 3.11%. This is not all-time highs here for transports. That is up at that 282 level. And right now, that definitely seems within striking range of current levels. Next level of resistance, 276.50, and then above that, 282.41. So seems like we can get there. Momentum bullish, RSI bullish. Got another swing to the upside, clearly looking strong. And this is actually a very similar structure to what we see on discretionaries. Rallied aggressively, dipped, found support, and I'm waiting for that bigger breakout. And then looking at industrials, this just continues to march higher every single week. Had one bearish week there at the beginning of January. Everything else has been colossally bullish. It's run from 96 all the way up to 116. And this is all-time highs here for industrials. The previous high was October of 20, down at 107. And you can see we overthrew that in July, pulled back really strongly, round-tripped that whole move, and now we've broken out well above all of those highs. I don't have any levels, and you can see we're right at trend resistance already. Let's go ahead and add a trend just to see what it would look like. Kind of hard to put it there because you can see there's only one touch point. It's just a parallel to these other ones. If you get there, that would give you a price target of around 121, 122, just to put something up there. But like I said, you're waiting for a break here, and then it's obviously price discovery. Moving over into market indicators, looking at breadth, you can see 20 breadth flat on the week. 0.45 momentum ticking towards bullish, so that's a little bit interesting. Might see a swing here up into that 85 range, and then you would get a second top, and then I would expect a bigger breakdown from there. With momentum ticking up, you have to respect this as an area of support and potentially looking for that bigger move, like I said. And then looking at 50-day breadth, continue to find some support in this 45 to 55 range, but momentum still bearish, RSI still bearish, and it really hasn't shown any signs of reversal quite yet. Big pin bar, but hanging man candle typically bearish, so not seeing it quite yet. Still looks bearish to me on the longer term breadth. And then moving over to 200-day breadth, we got a bearish candle, 1.89%. You can see we're kind of in this channel here, and we'll look at it on the daily chart, but it does look like it's breaking down. We didn't take out this low here from 15 January week. That's at 64.74, and that is an important level. You can see it marks the tops here going back to November of 22, this kind of neckline here before that bigger break. And then similarly here, once that level broke on this down move from July, it was significantly lower. So let's look at it on the daily chart. Can see that flag type setup, like I mentioned, did get below it, did retest it, did break down, but it's still holding that 55 EMA, momentum bearish, RSI bearish. So longer term breadth, 50 and the 200 really look much more bearish. 20-day breadth looks like we could get a pop this week, which does fit with the seasonal thesis as well. Rally into that options expiration, and then we see that bigger breakdown in the following week. Moving over to the M2 money supply, I just want to highlight the fact that you can see here in October, we've been going higher in terms of the amount of money currently in the M2 supply. This is a super lagging indicator, which is a bit of a bummer. It only goes out to the 1 January week right now, so definitely something to keep an eye on, but you can see right at that turning point as markets started to go higher. Just 1 week later, we saw the M2 stock going higher, and you can see right here, dip on that first week of January, slight dip here on the M2 supply. So M2 seems to be going higher, which is interesting. And even with that M2 move, we're still not seeing inflation go higher. But I think the current driver of markets is AI, along with the fact that the M2 stock is actually going higher. So there's more money in existence going into markets, and that's even with the higher interest rates and with the Fed currently rolling off their balance sheet. So something to keep in mind. It's definitely driving markets, and it seems like higher is the current direction. Moving over to the put call ratio, you can see we really haven't moved very much. We haven't seen any major spikes over the last few weeks in either direction. The way that I look at this is more of a contrarian metric. You can see the spike on puts here as we were dipping low, which would have told you that this was probably not going to have much follow through, and sure enough, you got that bigger move up. And then similarly here, you had a bunch of calls entering the market, which did result in a little bit of a pullback, but it was quickly reversed by that big spike to the put side, meaning too many people got bearish too quickly, and it ended up resulting in a bigger move up. So right now, not seeing anything. What you'd be looking for is a big spike into that call side where people are just getting too optimistic, and then you would start to see a topping in markets. We have not seen that yet. Typically that 0.5 area is where you see it, just like we saw here right on the top of the market, but that's how I'm looking at it, and there's nothing here yet. Moving over to the dollar, really haven't seen much from the dollar. Like I continue to mention, we're right at that 144 EMA on the daily chart. Momentum's fading a little bit. You can see hourly chart still holding up at that 144, so they're both hovering at that level. Let's look at it on the weekly chart. You can see still positive on the week. Momentum still ticking towards bullish, so you'd argue that this is still bullish. As long as that 144 EMA on the daily chart continues to hold, it does look a little bullish. We did get an initial test of that 104.40 level, overthrew it a little bit and then pulled back. We're below the 21 EMA. You need to see it hold above the 21 EMA, hold above 104.40, and then push to that 105.50 level. And if this dollar continues to break into those upper resistance areas, to me that would mean that equities are going to be breaking down. In terms of structure, you can see low, higher low, so that would indicate high, potentially higher high. up in that 109 area. Certainly possible. There's not a ton of momentum in here yet. We just got that first tick towards bullish on the weekly chart, which is important. The question is, how much follow through will it have? You can see times where we have slight dips, got a couple of weeks of rally, which was pretty strong. But right now, like I said, still bullish here on the dollar, indicating some weakness in equities to come. Might be patient here until CPI, and then after that, options expiration. Moving over to bonds, you can see both of these are still in the same range that they've been in for several weeks. J&K has been trapped within this range, bounced off the lower range, back into the middle here, right around that 94.82 level. Momentum on the weekly continues to fade, so I do think this will eventually break to the downside. And that makes sense with yields looking strong. We talked about those in the Friday video. And then looking at TLT, similarly, broke down, tried to bounce, hit the 55, rejected from there, and now this looks more bearish. Got the 21 EMA on the weekly sitting at 91.92. I think that's an interesting level. I also have one here at 92.82, so right in this same range. If this breaks, you're looking at 89.16, and then below that, let's go ahead and add a level at these most recent wick lows. Let's go ahead and put it there at 82.60. Still looks bearish and makes sense with yields going higher. Moving over to the VIX here, you can see on the daily chart, we did get a slight pop on the Friday session, still holding around that 1275 level. Remember, from the opening, the historical average is a 17.5 all the way up here. So we're well below those levels. If we did get a spike into that range, that would obviously be very bearish for markets. And you can see we are at that important level. We did test it on Friday. It is holding as a slightly higher low. This still seems kind of like an expanding rising wedge. We didn't get to that upper bound like I thought we would around that 1650 area. That's kind of what it looked like in terms of a pattern. Still holding up, probably see a little bit of a spike into CPI just because of that news release. And then the question is, do we see that bigger spike after the options expiration? I do think that that is going to happen. And then looking at it on the weekly chart, again, not a ton of information here. Big bearish week, still holding slightly higher momentum, still bullish a little bit, just barely at 0.03. So nothing convincing yet. Like I said before, this can hover in this range for a long time. Did get a spike last time, probably going to get into that same area at some point, but timing is everything. Moving over to my accounts, you can see I am up quite a bit on the week. I think I was around $1,500, so about 1.5%. Pretty strong on the week, especially with having these covered calls on. Pretty happy with it, honestly. And then looking at current account level, obviously I added money this week. I'm really trying to attack this leverage position. You can see here how much leverage I'm using. A lot right now, 77,000. So I'm going to have to pay some interest on that. But right now it's been worth it. Everything is still going higher, so I'm making money on that leverage. Just keep in mind that I am doing it, and that's why I'm trying to add some money into this account, so I'm not paying so much in interest. It is expensive, but I am making more money on that money right now as markets continue to go higher every single week. If that starts to change, then maybe I'll adjust my positions here to not use as much leverage. I've also been considering using TQQs just because it's a much cheaper stock as a replacement for these contracts. I'm still working out the math on how I would do that to potentially use a little bit less leverage here, but right now everything still looks good. Holding 192 calls for $10 on this IWM position for 46 days from now. So that puts max profit up around 202.67. So trying to make a little bit of money there over the next 6 weeks. And then my normal triple Qs position, max profit there just short of 436. And you can see we're already at 437. So just being patient there. I might roll out the week once we get those weekly options. Depends on what we see from CPI or if we start to see a turning point. Just being patient here. Still lots of money to be had at $2,300. This will go down to zero if we finish at my max profit position. So about $2,300 more potentially on this position to come in over the next 6 weeks, which would be a pretty good start to the year. We're about 6 weeks in at $4,600 net profit, and then looking to get another $2,300 on that position would bring that total up to that $7,000 range. That's assuming that none of these other positions make money. So everything's still in good shape. Markets have been super bullish, so it's pretty easy to make money when everything goes straight up every single day. And then looking at my TQQs position here in my IRA, I have a covered call for $3.60. So that puts my max profit there at $61.60. So about another another $1.50 potentially over the next 2 weeks on that position. And then I did sell a 1 week cash secured put here at 58 for 78 cents. Not really trying to make any adjustments there, just being patient on this second position. Overall, definitely bullish in terms of position, but a little bit more neutral on the Qs as I'm being patient at my max profit. Let me know down in the comment section what you think of markets. Are any of those concerns valid? VIX being at really low levels, but still seeing strong earnings and still seeing strong growth. But the question is, what is the next major move? Is it 10% up or 10% down? It seems like down is more likely just based on probabilities. But again, like I said, timing is everything, and it's tough to play out that timing. So otherwise, if you got any value out of this video, make sure you hit the like and subscribe button and hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.